Right. Welcome back to the market. Pankaj Pandey, the head of research at ICICIdirect.com, is also joining us now. Pankaj, the big news in the morning, of course, has been as expected the Z-Sony deal. Um, I wanted to ask you that with a new age media company that could be created, 45% will be owned by the public shareholders. You're talking of an infusion of nearly 8,000 crore rupees. Puneet Goenka is going to stay on as the CEO as well. With this play that's coming in, is it time for re-rating of the media sector at large?
Hi, good morning. I think, see, on Z, we track the stock. The only challenge is that this company is in our restricted list. So I'll not be able to comment on this particular stock. But what we have seen is, see, last year ad revenue declined in double digits. Now we are expecting from second half onwards overall recovery in ad revenues to sort of pan out. So I think overall, this is one of the recovery plays, or the entire sector is sort of one of the recovery plays, and which is why I think that the sector could be in limelight. Uh, Nothing much to add because we really do not have too many companies under coverage in the media space.
Pankaj, why are banks getting just smashed? Even on the bad days they are falling more, on good days they are not able to gain elevation. Yesterday markets did okay, banks came down. What is the reason?
So, Nikunj, I think on banks, even we are sort of surprised given the fact that risk reward for most of the banks, including the private sector banks, is quite well. But we are yet not seeing price performance. I think one possible reason in our sense is that when we look at large corporates or companies which are under our coverage, I think for companies whichever are looking even for expansion, I think the element of debt is very minimal, and which is where I think a bigger concern emerges that whether we'll see that double-digit kind of a credit growth even the next 1 year, despite all the perspective that you see a lot more aggressive capex cycle sort of panning out. So probably this capex is going to sort of happen or will be sort of largely funded through equity, since the markets are quite strong. So I think that is one of the other reasons, one of the main reasons. I think the other reason is probably we still don't know how much fintechs can sort of damage or mute their earnings going forward. I think value migration in terms of market cap, they have already started to get. So I think whether the disruption will sort of play out or not, but initially anxiety levels are quite high. So which is where I think a combination of these factors is not really allowing banking as an overall sector to sort of deliver well.
Pankaj, I was reading this report, which also said that materials was the best performing sector for the first time since 2016, followed by industrials as well as technology. Despite being in the pandemic, healthcare has been one of the worst performing sectors. What did you make of that? And as far as materials go, clearly there will be more upside, right? Because the real estate boom has just started. Infrastructure is also going to be very much in focus as the government pump primes the economy.
Correct. So, except for banks, which had a role to play, I think the other pockets or segments are looking good. So, when you look at HFCs, you are seeing more than 20% kind of a growth in the last quarter. Similarly, for real estate, if you look at Brigade is our top pick. So that is one segment which is looking good, and associated industrials also, or the capital goods sector. So right from something like Siemens, ISAB India, Adore, Grindwell, Norton, LG, the bearing companies, SKF, NRB, and something like Action Conception Equipment. I think all of them have been sort of guiding for a pretty healthy growth rate for the next 2-3 years. And I think we haven't seen that kind of a price performance. So I think that is one pocket where we could see substantial outperformance next year. I think they haven't really sort of performed since it's sort of a cyclical in nature. So I think that is one pocket which is looking quite attractive when we head to next year.
Looks like we are in for a flat start. What is that important make or break point beyond which you would say I'll be a bull or I will be a bear? What is that line in the sand, so to speak?
So on the Nifty, looking at 16,950 yesterday's high, That would be the first point where it becomes bullish. And along with it, I would expect if Bank Nifty is also about 35,200, that would be an indication that we've made some sort of a bottom and momentum is back. So Bank Nifty has made a bullish Harami pattern on the candlesticks, but it needs to cross yesterday, the day before's high, the big candle's high. So on the Bank Nifty, 35,200, on the Nifty 16,950. If we sustain above that, we have another 250 pointer on the Nifty possible. So overall, watching out for those price points. On the downside, till the time we hold above 16,700, it's all okay.
Pankaj, looks like we are in for a not a very subdued kind of an Christmas season. No hotel big cancellations have happened. If you look around and speak to friends, family, there are no large, massive last minute cancellations. But stocks have reacted. The stock of PVR is down. The stock of Inox is down. The stock of Indian Hotels is down. Is there a bounce coming there?
So I think, Nikunj, say for example, in case of say hotels, while the anxiety levels around the new COVID variant and its impact is already there in terms of share prices, but I think one also needs to look at the kind of sharp improvement what is expected over the next 2 3 years. I think our sense is that with limited supply in case of say hotel industry, our sense is that for something like Indian hotels, so while margin was minus 23 or 22 odd percent a year before, I think they'll be easily able to cross these margins FY23 onwards. So I think, and it is quite possible that if supply is not coming, you will see far more occupancy improvement as well as ARR improvement. So that way, I think you could see a lot more structural changes or turnaround in some of these stories. So we like the entire pack, whether it is Indian hotels, whether it is EH, Oriental Hotels, another stock which we like. I think all of them have addressed the balance sheet issues. I think the P&L is what will keep getting stronger over the next a few years. And I think that should sort of trigger a re-rating or better price points or going forward. So I think that space looks good. I think the near-term concerns will remain because I think the next 15-20 days or probably a month is important in terms of to gauge the severity of this new COVID variant.
Kunal, another stock which we don't talk but it's done very well is TCI Express. It's been a phenomenal success story for 2022. Let's look at the YTD graph here. And Kunal, we don't talk about this illiquid stock, but it just caught my attention because it keeps on popping up in terms of top gainers. Let's look at TCI Express yesterday up 10%. But if you look at the year, which is what Mahima will have to now pull out, the year for TCI Express, it's just one of those rocket years for TCI Express. It represents the logistics space. Not every logistics stock has had this kind of an year. But there you go, 1420. Kunal, you track this one?
So frankly, I don't track this one, and I think as you rightly mentioned, one of the point that it's a bit illiquid. The average volumes for TCI Express, excepting the last maybe 1.5 or 2 months, has been in the tune of 45 to 50 or thousand shares on the NSE at least. So that's pretty illiquid for the stock. But nevertheless, it's done pretty well for itself this year. In fact, the last 3 or 4 years as well, the stock has gone into a very decent kind of an uptrend. It's given positive returns in the last 3 to 4 years. But this year, of course, has been a breakout year for TCI Express. Short-term charts, I think one of the other patterns or concerns for the stock is because of this low liquidity or the illiquid nature of the stock, the volatility into these stocks, they typically tend to be high when the stocks get into a range. Now, for example, if you see a price trend like yesterday, the stock made a low of I think 1800, 1811, and the high for the stock or the closing was almost 2300. So that's a huge swing or a range for a stock like TCI Express. But then chart wise, yes, the patterns are very strong on the long term basis. This has been a fantastic year for the stock. I think it's gained some good support from the August to September lows of 1275, 1300, and from there the stock has not looked back, managed to be more consistent in terms of price uptrend. But it's just that the volatility and the swing into these stocks could be a bit more higher. So don't track it on a regular basis. But yes, the stock looks very attractive on the longer term time scale charts.
Yeah, it was a good day for the market yesterday, but if you take banks out, I mean, it was an okay day for the markets yesterday. If you take banks out, it was not such a bad day. Naresh, 888, just a number. I'm not trying to indicate anything, but 888 is the number for McDonald's. It has trended up very, very smartly. Is McDonald's headed towards 1,000 rupees? Can this three digit stock be four-digit very soon?
So continue to remain bullish on the stock. It gave a breakout above that 800 mark, which was the high back in 2018 as well as in 2015. So we went to 1000, we've retested 850 odd levels. So 800, 850 remains a buying zone. And eventually I would expect it to be much higher than 1000 also. So in the short term, momentum starts once we cross above the recent swing high of 940. But 800, 850 is a buy zone for the long term. And say a momentum trade comes up about 940, expecting it to be much higher than 1000 in the medium term.
Pankaj, is it a good time to buy metals? They've corrected. They've corrected quite a bit. A 1500 rupee Tata Steel almost came to sub 1100. Sale has corrected 15-20%. Is there a trade there?
So Nikunj, we were positive on metals. I think there is an element of doubt which we are having as of now. I think what is clearly coming out is that the Chinese GDP is going to grow slower. And you have seen instances of prices, property prices correcting there. So given this backdrop, it is possible that the metal prices there might remain subdued. So if Chinese prices are expected to remain subdued, then it is very difficult for Indian prices to sort of do meaningfully different. Although at the company level, domestically, we would expect that even the raw material prices have also corrected. So probably you may not get the peak EBITDA per ton. But largely, I think things are still looking good given the fact that companies are pursuing capex and infrastructure spending domestically is good. But I think we are still not very sure in terms of how the Chinese prices will behave, and which is where, like you said, there is the element of doubt. Having said that, I think companies which are sort of more of spread earners, something like Hindalco, looks a lot more brighter compared to most of your steel companies. Although the deleveraging in steel companies has been pretty robust and still continues.
Okay. Well, in the pre-open session, we'll figure out whether there is going to be a case of buy on rumors and sell on news for Z. It turned out, that really turned out to be a case for for Bharti, or for that matter, India Bulls surely. The other stock which did rather well yesterday is Bosch. Naresh, we don't talk about Bosch, but 4% move yesterday. It's an FNO stock. Cannot ignore that for long.
So if you look at Bosch, the stock has been pretty erratic in terms of momentum. So the stock has been around that 16,000 mark for the last 4, 5, 6 months or even more. It tried to make that breakout about 17,000, went to 19,000, and then we are back to that 16,000 mark. So technically, it is tough to take a call because the last momentum did not continue higher. We started making lower bottoms. So I would start looking at it only if it crosses the recent swing high of around 17,000 level. So above 17,000, we are back into play because the last breakout point was that 15,500, 16,000 levels. It made a move all the way to 19,000, could not sustain. So, and it has made two lower bottoms. So the trend is still down, but it could be a trend change if it crosses 17,000. And the only reason I would start looking at Bosch is because it's the one of the few stocks in the auto segment which is actually still higher than the prices back in September, October. Most of the auto names are actually trending much down. So out here, Bosch will start to look interesting above 17,000.
Okay, that's the call as far as Bosch goes. More stock specific news. This is a news break that has been confirmed. You heard it first right here on ET Now. And exactly the way we told you, Yes Bank has approved fundraising of up to 10,000 crore rupees. Watch out for Yes Bank. My colleague Ankur, who first broke the story, now joins us with the latest update. Good morning, Ankur.
Yes Bank board has approved raising funds up to rupees 10,000 crore, and this is completely in line with what we had reported here at ET Now. We had reported earlier that Yes Bank board is going to consider fundraising from 10,000 crore to 15,000 crore on December 21, that is on Tuesday, and the fundraising will be done in different tranches. And accordingly, the press release of the company says that the board has approved raising up to rupees 10,000 crores subject to shareholders' approval. This fundraising will not be done in one go. Instead, as per need, it will be done in tranches in mix of equity as well as debt options. Over the period of time, as and when it is required, the bank will go to market for raising funds, and we learn that this exercise will begin from the first quarter of the next financial year, that is financial year 2023, not the current quarter. Earlier also, the bank had an enabling provision from the shareholders for raising funds. However, now since it was expiring in the month of February, the board has given a fresh approval for raising funds up to rupees 10,000 crore, and bank will do it as per need basis.
Right. Thanks, Alankar, for joining us with that. That's a news break confirmed on Yes Bank. Naresh, if I can come to you, I was scanning the list of, the fresh 52-week highs, and I see CG Power is once again there, 175 rupees. On 1st of January, it was 45 rupees. You're talking about a 290% increase when it comes to CG Power. Seems to be only headed one way north, but when you look at the charts, what is it indicating?
So this has been one of the stocks which got into a one-way rally post the management change. And technically, if you look at it, it has been consistently making higher tops and higher bottoms. The recent breakout, the last 52-week high and the swing high was around that 165 mark. It broke above that, went to 190 and has come back to 165, 170. So till the time it holds above 165 mark, the trend is positive and we could again go higher. So out here, because the stock has rallied all the way from single digit to almost 170 levels, the best way to trade is to keep a trailing stop loss. So out here now the trailing stop loss would come to 160 and continue to ride on to the move. And we've seen over the last 1 month or so, it's all the capital good names which have done well, whether it is a CG Power or a Bharat Bijli or a Thermax. So the trend is very clear that there is some leadership happening across the capital good names. So CG Power being one of the names which has been the best performer over the last 1 year. One has to just keep on riding onto it with a strict stop loss. So out here, 160 as a stop loss and ride on to the trade.
Another such stock, Kunal, when you look at the year and the performance, and is Minda Industries. You can call it the EV wave and all of that that's going on. It's a stock that year to date is up by almost 175%.
Well, yes, Nantaran, I think the last 3 years for Minda Industries were very, very subdued in that sense. So when I look at it from a very long-term kind of a time scale, the stock was getting into a contraction kind of a zone over the last 3 years, where the ranges were getting a bit narrowed for the stock. But I think this would probably be a breakout year for Minda Industries when you look at it on a longer term time scale. Now, from here, typically when you see such kind of strong breakouts where the stock typically closes at the highest point, at the end of the year, we see a follow through price action which could probably last for at least a couple of years, if not more. So after the breakout year, 3 years of consolidation prior to that, and then a breakout year, we typically would probably expect that the stock would move up higher substantially from current levels. So I think this has been one of the few mid-cap names which looks quite strong short-term charts wise, as well as on a longer-term time scale. And I think at 1100 odd levels as well, would go for a buy on dips kind of an opportunity over here. The stock also has this tendency of forming a new base or a new support at every price breakout point. So earlier, for example, 700, 750 was a support that got shifted higher to almost 800, and then the nearest support now for the stock is closer to 950 to 1000 odd levels. So keeping that range 950,000 as an entry point or as an averaging point, I think buying from current levels would be advised.
Kunal, pre-open has just started. Any mid-cap ideas in the pre-open market?
So I'll go with another IT name, Pankaj, and I'll go for Coforge as a buy. Many of the IT names yesterday managed to give a breakout. So on charts, on the daily charts, Coforge formed a bullish engulfing pattern on the daily time frame. So I'm expecting that the stock would see a substantial follow through price action from yesterday's close I think 53.95, 5400 was the close for Coforge yesterday. So expecting a substantial up move over the near term, buy with a target of 5,600, stop loss to be kept at 5,300.
Right, Nuresh, any ideas from your end on the mid cap side?
So looking more at a large cap, which is DLF, the stock has corrected well all the way from 440, 450 levels to 360. The last bottom was at 360. Yesterday was a pause, expecting it to again bounce back towards 440 eventually. A strict stop loss at 360 here.
Right. Let's go across to Pankaj Pandey as well. Pankaj, in terms of FII flows, are you surprised by the intensity of sell, or the market size has grown in a couple of years and that's how one should look at it?
I think if you look at what we have seen is that in the last 1.5 months, we've seen the FIIs outflows of nearly more than 70,000 odd crores. And market is down only 10-11 odd percent. Compared to that, even we had similar kind of outflows in March 20. So where the market correction was 40%. I think this is a very good sign in terms of deepening of markets. So we are able to absorb FI outflows without much of a sort of a crack in the overall indices. So I think it's a sort of a structural positive for market like ours. And I think the other factor which is sort of helping equities at TINA factor, basically, you really do not have an asset class which can sort of deliver double-digit returns. So which is where I think the relatively unattractiveness of other asset classes is also sort of helping equities. And I think if this kind of a trend sustains, we would want to believe that new highs could be made going forward once this selling from FI subsides.
Okay, hold that thought, gentlemen. Let's play you a soundbite of Ramdev Agarwal. We did have the market veteran on the channel earlier this week. Here he is talking about electric vehicles, considered to be one of the big disruptors in 2021. Look what it's done, for example, with the stock prices of likes of Tata Motors, which has struck a deal. The two-wheeler pack, meanwhile, is also struggling thanks to EV companies focusing on the two-wheeler segment. Here's more from the market veteran.
See, the value migration from IC to EV is no more a question mark. It is done. I mean, whether it happens in 5 years, 10 years, 15 years, that's the broad trend. Now everybody will participate. The existing guys will also put in their own EV products on the market, but they are hoping that when it becomes, I think, I only hope they are not too late in putting their products in the market. But I think still I mean, they are very aware that this EV and government's policy is also very clear. They are really been kind to EV, so it is real. And whosoever makes a success, I think they need to be priced in advance. So clearly, the companies which are putting in the original R&D money and all, there is a lot of expectation that these companies will do well and they'll be valued enormously. Like Tesla, you've seen $1 trillion valuation. It has put Elon Musk into different category altogether in terms of richness. So I think that is one inspiration because of which other companies which are originally R&D led and coming out with unique products, but they are pure EV companies. They don't have baggage of legacy. That is the one fundamental thing, because
Catch that entire interview with Ramdev Agarwal on our social media platforms. YouTube, Facebook, Twitter, literally take your pick. Well, it's 9:05 a.m. Ladies and gentlemen, you know exactly what that means. It means it's time for an exclusive story here on ET Now, as well as ET Now Swadesh. And this time we get you one from the banking space and a little bit to do with the travel space as well. We're talking about Cox and Kings. Recovery of about 6,000 crore rupees of debt resolution process of Cox and Kings has hit a big bumper because there were no bidders. What happens next? Liquidation? Let me go across to my colleague Ankur, who's joining us live with this exclusive story. Good morning, Ankur.
Yes, not so good news for the lenders of Cox and Kings, who were looking to recover close to rupees 6,000 crore through insolvency and bankruptcy proceedings of the company. Now the company is headed for liquidation as no buyer turned up for the company. We learned through sources that the official liquidator has already begun the exercise of calling for fresh claims from all the stakeholders, including financial creditors, and these claims can be submitted till February 19, 2022. After this exercise is completed, a formal process of liquidation will be conducted for the company, and a reserve price will be set for the auctioning. We also learned that the liquidation value of the company is around rupees 500 crores. So out of debt of rupees 5,838 crore, 500 crore liquidation value means a haircut of more than 90% for the lenders. The company was under insolvency proceedings since October 2019 after it failed to repay its loan to creditors, and also few of the lenders have already declared this company as fraud. Now we need to wait and see that how soon the official liquidation of the company can be completed so that lenders could recover some amount.
Well, thanks, Ankur, for that. That's, of course, a news flow coming in from the banking side regarding a company, Cox and Kings. Then let's talk about the pre-open session, which is about to end. So you have a Power Grid down 3%, Indus Tower is flat, Aurobindo is flat so far, Alchem is not doing anything, and probably Z is one name to watch out for. Muthoot Finance, Adani Transmission, Hindalco are some of the other gainers. Nuresh and Kunal are still with us. Nuresh, what would be your perspective on the metals pack? With such risk on rally, you think metals is the space to watch out for?
So in metals, my preference remains for aluminium because that's the base commodity which has been doing well. So from a high of 3,200, it went to 2,600 levels. In the last 1 week, it has given a breakout of the recent swing high about 2,700. So overall, aluminium looks the better one. And in relative outperformance also, we are seeing Nalco and Hindalco do better. So Nalco, if it can sustain above 102, that would be an indication of the momentum shifting back. But at 1995, Nalco looks the most interesting bet in the metal space.
Kunal, any view on metals name, steel, non-steel? How would you prefer? Vedanta has been quite solid with a lot of block deals.
Yes, Pankaj, but I think Vedanta has also been marred with a lot of news flow surrounding the stock. So I think that's why you don't see the stock being more consistent. In fact, the price trends at times is all over the place. Just about mid of November, for example, the stock was at sub 300 levels. It jumped up to almost 370, 368. And from 368, the stock is back towards 315. And I think yesterday it closed around the 314 mark. So when you look at the last 1 month of price action, it's just all over the place for Vedanta. But I think the most stable stock in that sense is Tata Steel. So other than Nalco, I think Tata Steel is the other stock which looks attractive. The stock forming a base around this 1,050, 1,070 mark for itself, even though it's trading below its 200 moving average. But I believe if there is any pickup of price action which could be likely for metal names, it has to be led by large cap stocks, specifically Tata Steel, which seems to have now found a double bottom support at 1,050 level. So if that stock holds on to that support, I believe there's a higher chance that this could be a strong revival case for Tata Steel over the near term.
Okay, that's the callers coming in as far as the metal stocks go. Remember, yesterday it was IT and metals that led to the pullback that we saw on the Wall Street, snapping the 2-day losing streak. But when we're talking about markets bouncing back, Naresh, it can't happen with the banks, right? It's a conversation we've been going on having. The bank Nifty yesterday went home at 34,607. So reclaimed 34,500, higher by about 0.5%. What's your call when it comes to the bank Nifty?
So the bank Nifty is in the process of making a major bottom around that 34,000 plus minus 500 points. That was the price point which it made bottoms in the last 6 months. Also, the fact that it is below the 200-day moving average, RSI has given a positive divergence. Now, given that it has been the worst hit in the whole segment, it would take much longer time to, relatively longer time to make a durable bottom. On the upper end, once we start sustaining about 35,200, that would be the first indication. And finally, the trend on the long term only changes about 37,300. So overall, it's making a base formation here. We should expect volatility to continue in this band, but closer to 34,000 odd levels, we are looking at a major bottom being formed in the banking space. A lot of the large cap banks like HDFC Bank is now closer to 1400, 1440. The low of the last 1 year is 1350. The second wave low is around 1350 to 1400. Kotak Bank is down to 1700 levels. The low is 1580 to 1700 over the last 1 year. So a lot of these large cap banks have come down all the way to the second wave lows and the last 1 year lows. IndusInd Bank, for example, is back to the prices of the second wave lows. Then if we look at the small cap banking name, they're all down 25-30% from their highs in January. So overall, a lot of it is in the price, but a recovery, whenever we've seen a big correction in any sector, it takes time to make a bottom. So out here, we are in that bottoming process. We'll see spiky moves all through the next few days where it will make a spike and again dip a bit lower. But overall, at 34,000 odd levels, it's a good time to be getting into banks if one has a little longer term.
Pankaj Pandey, I'd like to come to you because and take this question because we've heard so much about the reopen trade here, right? Whether it is alcohol, QSR, the airlines have also trying to fly back into the green for the year. Overnight on Wall Street, despite Omicron numbers going up, it's the reopening trade that really played out and pulled the Wall Street out of the red. As far as the Indian markets go, as far as reopening trade goes, what are your top picks? What are the kind of picks that themes that you like from the reopening trade?
From a economic normalization perspective, if you look at the entire hospitality as a space looks good. The likes of Indian hotels or Oriental Hotel looks good. On the booking side, we like Ease My Trip, that is one company. Then I think auto ancillaries are also sort of looking good. So this is one pocket which has been sort of impacted. And our sense is that while January numbers are also going to be bad, but subsequent to that, you'll see better numbers coming. And since we can't, so OEMs have a challenge in terms of EV disruption. But I think ancillaries like, say, for example, Gabriel, which supplies suspension, has got a 25% market share, guiding for nearly 20 or a good high teen kind of a growth. I think companies like this, similarly, the bearing as a space looks good. Say something like NRP bearing, where we have a target price of 175. 70% of the business is coming from OEMs, and once this OEM as a segment or auto as a segment normalizes, I think these are the companies which can do a lot more better. FY21, there was a dip in revenues, not that significant, but next 2 years, we would expect a high teen kind of a growth, both in top line and bottom line for companies like this. So I think these are some of the names which we are liking from our top line perspective.
Right, let's go across before the market open. You're out Ajay Bagga on mid cap versus large cap IT.
Mutual funds in large cap IT are not seeing any large inflows. So there is no domestic buying also in large cap IT stock. But mid cap funds are seeing inflows still continuously. Therefore, their ability to buy mid cap IT stocks. And therefore, Indian mutual fund can't buy large IT stocks because IT funds are not getting any money. In fact, if you look at AUM, almost static. Therefore, who's the buyer for large IT stocks? It's only FIIs. That's I think, partly explains the dilemma of different valuations.
Right, just about 10-15 seconds remaining for markets to open. We should get prices anytime soon. Just to recap, US markets have rebounded quite sharply. Pre-open is indicating a 94-point higher start. Not that anything major is being indicated by SGX, but wait and watch for banking names. Wait and watch for metal names, and of course Z with the deal as well. Z is down about 1% or so, 340 as far as Z goes. So it's slightly down, 339 as we speak. In terms of other names that are moving around, there you go, Z, 2% on the lower side, 341. Yes Bank is down about 2%. New India Insurance is down about 1%. Tata Motors is up about 1% or so. And HUL is also looking in higher, about 1% higher at this point of time, 104 points higher for the Nifty. ONGC up around 1% or so. HCL Tech up around 1%. DLF, PNB, Bajaj Finance, and Dalco are all some of the other losers. Power Grid is down about 1% or so, 3 rupees. ICICI Lombard is down about 0.5, 0.6 odd percent. Shree Cement is looking in slightly on the higher, weaker side with 0.4, 0.5%, and Indus Tower is also looking in on the weaker side, about 0.3% on the lower side. As we are speaking, I believe that markets are stabilizing, 109, 110 odd points on the higher side, where Z is up about 1% or so as we speak. So that's a name which is attracting some amount of buying, of course, after that mammoth deal that we have been covering since the start of the show. So there you go. Adani Transmission is up around 4%. Yes Bank, there has been some news flow regarding what's happening with their entire space of fundraising, so that's up around 2% or so. HUL, there is a report from Citi. I think one or two others have also written reports on it, so that's up around 1%. Tata Motors extended on to gains, as well as DLF, Avenue Supermart, and ABB are looking in slightly on the higher side. Paytm, there is a report which is coming from Morgan Stanley, so that's up close to about 2% or so as we speak. It's the first positive report on Paytm really after a long time.
Okay, I'm just going to go through some of the stocks that are also hogging some of the limelight. Of course, Pankaj is taking you to the big ones. You've got a Tata Tele, which is down by about 5%. You've got a Yes Bank, so after approval for the fundraise that's come in, it's higher by about 1.5%. That's about 20 paise. Trident is higher by about 2.5%. You've got a Punjab National Bank also. As far as some of the other gainers and the buzzers go, you're seeing some amount of activity when it comes to a SpiceJet. On the opposite side, on the losing side, not that much. So that's as far as some of the action that we are seeing. But what is going on with the markets at large? You've seen the Lal Street snap a 2-day losing streak. You saw Wall Street make a strong pullback overnight thanks to the reopening trade. The big question is, I think what we were asking the earlier part of the week, the bull market, is it still very much intact? Is it that the pace of the market rising, is it going to slow down? Joining us to talk about it is Shailesh Rajpan from Nippon India Mutual.